There's a lot of money coming in from overseas to Europe, and that will give a very big pressure on the yields. We have seen this with a Schroders portfolio, for example, but there's a lot of money which is not satisfied. So I think the yields will move much lower, but the rents, I think they will stay stable.
It's undoubted that there's a huge amount of new capital in the market, and maybe we can kind of come back to that point and how that's being allocated to the sector. What I would wrap it into is, I think the reality of how you get access to stock, how the market is performing, does differ from initial investor perceptions. So I thought it was quite interesting that in the kind of opening presentation there was a discussion around it being a high return but high risk asset class, and I think specialists within the sector would not see it as such a high volatility asset class. In fact, we think it's performed quite stably, particularly if you're basing your assumptions off stable, flat or benign rental growth. In certain markets, we actually think that there will be significant growth because there's a lack of supply. If you look at the pan-European statistics, I think that masks certain hotspots. And again, with the investment, on the investment side, it's not as easy just to turn up and say we're going to buy warehouses at 7.5% to 8% in Germany, or indeed Poland or France or the UK. So working out how you get access to pipeline, and both in terms of stabilised investments and development, is a key part of being able to get your performance. And again, I think that's slightly different from the perception that people might have of the sector and how easy it is to operate in it.
In today's market, people are definitely looking for cash flow and therefore obviously attracted by the high yields of logistics. At the same time, I also think that logistics, from an investor point of view, has become a more mature market. You've seen a number of operators that have established pan-European platforms, but also from the occupier market, it has become more mature. Occupiers are becoming larger, becoming more multinational. On top of that, I think investors also realize that the fundamentals of the real estate are actually quite healthy today. So meaning that both yields and capital values are probably cyclically low. That there's some structural drivers of demand, such as the e-commerce that we've spoken about, but also consolidation within the sector. Obsolescence of older stock, places like Poland whereby there's new demand being generated because of investments in infrastructure and so on. So I think there's a number of factors, and including also the lack of speculative supply, that have made this sector quite interesting from an investor point of view.